Hey there, folks. Greg Shepard here, S&A Financial Services. For those of you that don't know me, I specialize in helping folks just like yourself all over the country navigate, basically get the most out of your higher ed retirement plan. So recently I've been asked pretty good question, so I thought I'd bring it to the YouTube video clip universe here. Is that I've been speaking a lot about TIAA Traditional, given the fact that their interest rates are so high right now. FYI, new contributions going into that TIAA Traditional on the RC contract, you're looking at 6.25% February 2023 right now. RA contract 6%, GSRA, GRAs, anything group is going to be less than that, but nonetheless very attractive. So you get a lot of questions, a lot of attention surrounding TIAA Traditional in this environment. Won't last forever. When those rates go down, that when interest rate environment goes down, subsides, that TIAA Traditional fixed rate will go down as well. So the question is, I think this person was from Arizona, ABOR, I'm not positive. Is it a good idea to use TIAA Traditional in lieu of bond investments within your contract in cash? So is TIAA Traditional a good investment to use instead of the bond choices and cash within the contract? It's a good question, and I've done this a lot. This is not investment advice, folks. Do not construe it as such. Make sure you consult with somebody in the financial advisory world dealing with higher education. Not necessarily TIAA folks themselves. They're great folks, wonderful company, but they work for TIAA, correct? Okay, so we can kind of put two and two together there. Is it a good idea? I've implemented this strategy with other folks in higher ed. I'm not saying you go do that, but if you take a look at your contract, here's where the issue lies. If you take a look at your contract, maybe not yours specifically, but generally speaking, like the one I just looked at this morning, I looked at, I won't name the university, looked at the list of bond investments. We have stable value return, which is a step, it's basically a money market that's liquid. Okay, you'll notice the rate that it pays is less than TIAA Traditional. Okay, it's liquid. So you got, and I'll call that cash. You got cash, money market, core bond. Right now, it was paying 4.5%, which is good in today's environment. But the track record on that thing, not investment advice, isn't that good. I don't know how else to put it. Okay, core bond. Inflation-linked bond, which is just that. It protects you against inflation. Well, inflation's starting to come down, so it's not as attractive. Doesn't pay as good of a rate interest right now that it did a year ago. What else was there? I think that was about it. No high-yield bond fund. No high-yield bond fund in a lot of contracts that we deal with. Not to say yours doesn't specifically have it, but it's interesting because as a participant, you look down the list of your fixed income bond choices. I just went through like 3 of them. They ain't good. So you're looking at, okay, this one's not good, this one's not good, this one's not good. Oh, look at this TIAA Traditional. Paying 6%? That's fantastic. Not knowing a lot of the cons that go into TIAA Traditional. So with that being said, it can be. Yeah, and the answer is yes. It's a good alternative to bond/cash money market investments, but you have to know what you're doing. Okay, you know the old saying, if it's too good to be true, you can finish the rest. Not necessarily for all cases, but make sure you know the restrictions around TIAA Traditional before you get into it as an alternative to your bond and cash investments. Now, I've done a podcast. I don't have time to get into it right now. I've done a podcast episode on that. I will be doing one on this. Check out the podcast station. Is that what it's called? I'll throw down the link below. I really do encourage you. I think you'll take a lot from that. I have more time to get into things. All right, folks. Greg Shepard here, S&A Financial Services. You all go out and have a good one. All right, bye-bye.